Please coming up, Alex from Urbis.
Thanks, Mike, and thanks for having me today. It's great to see such a full room here, and I think it really sort of speaks volumes about, I think, the increased confidence and that we're seeing in the market, and I guess the feel, which is a lot more positive, I think, at the moment, which is great to see. Yeah, we're very pleased to be partnering with the apartments.com team around the country on these events and sharing some of the data that we are tracking as part of our Apartment Essentials platform. I see a lot of familiar faces in the room who do partner with us on this dashboard, and very pleased and grateful to everyone for their support on this. For those who are not aware of what we do, we track projects from when they lodge application through to pre-sales, approval, pre-sales, construction, and completion and settlement. And every quarter, we're doing a survey of developers who are actively selling projects and compiling that data on terms of number of sales by apartment type, buyer profile, the size of apartment, for example, and packaging that up into an interactive online dashboard. As you can see for those who can see the screen, it's available free of charge to those who participate with us on the survey. So it's really just a way of providing some data back to the industry to help people make informed decisions about what's happening in pretty active point in time data that's recent, and not having to wait until all the settlement data comes through. So just a couple of slides today, and for those who can see the screen, we're tracking the completions over the market. No surprise that completions peaked just after the peak of the market in 2018. And from there, for the preceding 5 years, it slowed down as the market softened. There was less commencements, and then that sort of fed into the COVID period as well. So we saw a big decline in completions, and that's really led us to the position we are now of being in a chronic undersupply across Sydney, as people would be well aware of. Looking forward, we're tracking projects under construction and in pre-sales. And from what we're tracking in that inner middle ring of Sydney, we're anticipating to see a bit of a stable level of completions over the next 2 to 3 years, but well below where we need to be to meet population growth. So really highlighting that fundamental undersupply in the market, which bodes well for that demand moving forward. We're tracking by profile. So 10 years ago, when the market was booming, sort of over 40% of sales were going to foreign investors, with around 30% going to sort of more domestic investors. Over time, the government increasing stamp duties for overseas buyers, money coming out of China sort of slowing down. We've seen that flip on its head. And this year, sort of 75, 80% of sales are going to owner-occupiers, 20% or so to investors, and only a small proportion to the foreign buyers. So we're seeing some definitely some green shoots in the investor side of the market, which is good. The downward trajectory on interest rates, pretty strong rental market, definitely attracting those buyers back into the market, and we're seeing strong interest there, which is good to see. And finally, we're also tracking what's happening in terms of off-the-plan sales as a share of what's available in the market through our survey. So you can see here a bit of volatility, but 10 years ago, we were seeing projects sell out in a weekend, 300-400 apartments going like that. That sort of slowed down pretty quickly in 2018, and we were seeing about 5% of available stock selling each quarter for a number of years there. Then it spiked in 2021 with the lower interest rates, and that positive outlook coming out of the pandemic definitely boosted things up. And then since then, we've sort of seen it stabilize at around 10% of available stock selling each quarter. Interestingly, the last quarter saw a bit of a jump up from the previous one, and we do anticipate to see that increase a little bit over the next 2 quarters in particular. Definitely some strong signs around that lower interest rates. As Mike alluded to, the government incentives around 5% deposits having an impact on buyer sentiment as well. So really strong interest. So if you do want to partner with us, please come and have a chat. It's a bit of a survey we do once a quarter, not much of an imposition. You get free access to the dashboard, which can be a really handy tool in terms of understanding what's happening in the market, saving you having to call around all the colleagues and competitors about what they're selling, Also useful for other aspects around acquisitions and other things. And if you have any questions, come see myself. I've also got my colleagues Clinton and Sophie, our town planning expert. So if you have any troubles navigating the nightmare that is Sydney town planning, come and chat to Sophie, and happy to have a chat later on as well.
Cheers, mate. So I guess one of the key things that we've been talking about across the country with these events is what else does the government need to do? And obviously they kind of have done some things, as said, whether people like it, agree with the way they're doing it or not. They're certainly taking action in terms of stimulus and things like that. So how do you think what they've already done, is it enough to kind of get the market going properly over the next 12 to 24 months? And what's your read on how things are likely to play out from a metro point of view and then from a regional point of view too?
Yeah, I think definitely, as you alluded to with your data there, in terms of the spike that we've seen with the 5% deposit scheme, definitely I think attracting a lot of interest across not only metro but also the regional areas as well. I think they've been a bit more reasonable in terms of the thresholds they've applied for those. Previously, some of the thresholds for first home buyer grants and the such were pretty low, especially for Sydney. That meant you couldn't really get anything outside of 50 k's from the CBD. So definitely positive. Here in New South Wales, the government definitely trying to focus on supply, and with the HDA and other aspects, and affordable housing, which has its challenges, but definitely trying to hopefully see that supply flow through to commencements, which would be good to see.
Agreed. And we see a lot about the inquiry trend. The inquiry is kind of following the new train line through to Castle Hill. Where do you see the opportunities around as the kind of loop begins to, as the rest of the project kind of continues to go forward? Where do you see the opportunities for developers?
Yeah, the metro I think has been a game changer in terms of its success, in terms of opening up parts of the northwest of the city. We've seen a lot of activity more recently in that, as you alluded to, that corridor from, say, North Sydney through to Crow's Nest, Chatswood, all the way up to Castle Hill. We've got the next stage opening up to Bankstown. That will increase the loop. We're not tracking much activity in that part of Sydney at the moment. Some challenges in terms of the cost to construct versus what the apartments are currently selling for in that area. But I think as the metro opens up, that will only further unlock some of those stations and precincts heading out towards Bankstown.
Yeah, one of the interesting things we're seeing in Melbourne is obviously the 5% deposits, a great thing for the first home buyers, but we're seeing quite a lot of some of the more innovative developers, I guess you'd say, in Melbourne, focusing on how they can take the government policy and then add kind of their own spin to it. So, for example, I was speaking with a developer last week who's doing large projects in Melbourne, and he was saying that they're going to add like a 2.5% where the developer puts that money up to kind of reduce the 5% down to 2.5%. It's one of the challenging things about it being the 5% deposit across all asset, both established and brand new. It's still trying to figure out how do we kind of make that off the plan product compete effectively when there is often lower price kind of established alternative, although they aren't new. So I think using that data and using the kind of policies, whether it's train lines or incentives, and then coming out with your own spin seems to be working for a lot of people. And so what are some of the ways that people are using the apartment essentials data and reports and things like that in an interesting way?
Yeah, there's a lot of ways people use it, and it's very handy for internal reporting. If you need to report up to management or investors about what's happening in a particular part of Sydney, in terms of competition, future pipeline, sales activity. That's been a key one. A lot of people use it to inform their sales teams and their agents, to give them the information to arm them effectively to be able to have informed conversations with the people that they're speaking to at the front line of sales. And then there's other ways that are a bit more innovative around sort of acquisitions and finding that next opportunity, looking at the projects when they lodged application, when they got approval, and sort of highlighting where some of them haven't proceeded to construction, and using that to try and identify potential JV partners or opportunities where projects may have stalled or having challenges continuing on. And they've used it in that way to try and identify opportunities.
Appreciate you, Alex. Thank you for coming up and sharing some insights. Lunch is being served, and please join me in saying quick thanks to Alex and Urbis. Thanks, mate.